Good morning. This is Tom Aspray with the Viper Report. Thank you all for joining me. Um, if you're interested in other videos and classes we've done, if you happen to be part of Facebook, we have a Facebook page, and these are where most of the videos end up. So if you want to have, there's several that, about setting up my indicators and stock charts. So we'll kind of go through that a little bit, today, and some of the other videos that I have if you are interested. So let's start today's session. As normal, we'll try to finish this up 30, 40 minutes at the most. I sent out a special market update to subscribers to the Viper ETF and Hot Stocks report yesterday morning, because I knew some were sort of concerned that the market reversed so sharply on Thursday after Wednesday's nice gain. So I thought I'd give them a heads up, and really didn't see any change and didn't see anything to be worried about. And at the time, I told you I'd give you an update on the markets before we start the other part of the class. So this is one of the things I look at typically. So this is an hourly chart of the S&P 500. This is as of the close on Thursday. And you can see we got up to a high of 3019.56, in Wednesday's session. That was the 25th. And, pulled back on Thursday to a low of 29.97, but nothing really dramatically happened. You can see below here we have the on-balance volume. Had turned positive, at the start of the week. That Tuesday's action to come at its time was quite significant. On-balance volume looks strong, and even going into the close on Thursday, you can see you had this volume spike. So, we had a decline for most of Thursday. You can see the volume was declining along with prices. That was a pretty positive sign for me. So let's look at the rest of the technicals and see how they look currently. A week ago, we had some of the AD lines that turned negative, that dropped below their moving averages. So those problems have all been erased this week. This chart is the NYC Composite. On the top, 20 PMA, you saw that, and I think I may do a course up and coming about how to use the 20-period exponential moving average as a great tool to enter long or short positions. Nice pullback into the start of the week, right to that 20-period moving average, and then started to turn higher. Below this, we have one of the NYC AD lines that I look at, the all AD line, so that encompasses everything in the NYC. You see it made a new high, a week ago, just a minor pullback, turned back up on Friday, looks quite good, well above its moving average. It never showed any weakness. Below that, we have the stocks only. So this, on the NYSE, I think I mentioned before, it has a number of bond funds, ADRs, a bunch of other things that are not really, quote, stocks. So the stocks only did drop below its moving average at the end of the prior week, but it turned back to positive on Tuesday too. Still, in a positive mode. On the upside, we really need to see it close above these two peaks, and the peak from last week, that'd be an upside breakout. Conversely, you wouldn't want to see us drop much below the low we had at the start of last week. A couple other things. So let's look at one of the other AD lines. This is a chart of the Nasdaq 100, and below that we have the Nasdaq 100 AD line. The highlighted things are done by one of my students for my advanced decline line course that showed me there, sent this to me for my analysis, and I liked it so much I thought I would use it. So the red line here shows in early January when the AD line first moved above its moving average, reversing the signal from, early in December. And a week after that, of course, the weekly downtrends were broken. Pretty much all positive, into early March. We had a setback here, but no real technical damage, dropped below its moving average for one day, and gave a great setup for a strong weekly close. And we got another nice push to the upside. Same thing in the end of March. We might not be able to see it, but you can see that even though prices corrected here AD line did not correct as very much at all, which is a sign of strength. Then we did have a pretty good correction from the start of May through the end of May, and about the first few days in June, all the AD lines reversed back to positive. AD line is currently made a new high last week. Still shows a short-term and a longer-term uptrend, so everything's quite positive there and shows no signs yet of a top. And the last one on the overall market, maybe we'll take a look at, is the S&P and the high-low. You can see that we, on Thursday we closed at 30.25. You can see that mentioned just at the start here, we got down slightly below 3,000 on Thursday's pullback. New highs, new lows. Has started to diverge, so it shows a pattern of lower highs here. When I've discussed this and taught this, it's most significant to me when it's accompanied by negative signals from the AD line. Currently, we haven't seen that. So it started to show some deterioration in early May. We saw a nice rally in the new lows. Okay, so now the new lows. If we get over 100 new lows, that'd be something I'd be watching. We kind of broke the short-term downtrend, over a week ago on this minor pullback to the 20-period EMA, but nothing really, from the high lows to get too concerned about in this point. So let's go into, today I want to continue. I had some questions after the last session about using pivot points for both entry and exit points. So I wanted to take you through a few, different examples to show you how that, how that works. So it kind of take you through the process. So this was a stock we recommended a couple of weeks ago, I think about the 12th of July. And so this is what I was looking at when I decided to recommend it. It closed on the 12th of July at, 25.78 here. We did a high at 26.42, came back, moving average 20-week was moving higher. Volume had picked up. You can see we had a trend to 3 lower volumes. Volume was better that week. This down below here, we have the RS, or the relative performance, versus the S&P. So I assume most of you are sort of probably familiar with this, but essentially it measures how this stock is performing against the S&P 500. It does not tell you whether the stock's trend itself is positive or negative. It just says it's a relative measure. So, it had come down above its moving average here. That was a positive sign. Pulled back and turned up this week, so that's what I like to see. Down below that, the unbalanced volume, had also flipped back to positive. It moved, slightly above its moving average, back below it, and back above it. So that was a positive setup, so the next thing I look at is the daily chart, and this was the daily chart as at that same close on the July 12th. We had the high at 26.42, came down to the 20-period, EMA, and rallied up. So when I looked at this, I said, yeah, I really like the weekly, but I don't really want to chase it up in here. And what I'd really like to buy it be, a pullback, in towards this rising 20-day exponential moving average. This also has a good pivot, and the pivot, of course, was right at 24.26. So that kind of gave me a line in the sand. At the lows in June, it gave a pretty good pivot example. The unbalanced volume had turned positive on this rally, and bam, they just pulled the plug here for a couple of days. If you were thinking about it, or you bought it right up in here, you probably were kind of unhappy, but you can see we held right at the monthly pivot, and it was just a one-day thing. Volume, it was not significant at that point. The RS had turned positive, so we had a strategy to add to the position on a pullback, early in that week, and given that this overall pattern looked quite positive to me. So then we look at the current FTI. Turned out it, so we got that pullback. This is when the 12th high. I hope you can see this pointer. So we had a pullback of 4 days, into the end of the week, and then start to bounce a week later. Develop this triangle or flag formation. I find those very valuable. They're great trading patterns. We have a couple positions on now that are based on these sort of flag formations. They don't, sometimes they fail, but they allow good risk control. So it started to break away, and then it reported earnings before the open on Thursday. It's accelerated up the upside. So we recommended taking profits on half the position around, I think, 27.38, almost a 10%, profit in just about a week. But, mainly, I saw these two closes up near the upper, Stark band equivalents, and also near R1 resistance. So if I can get into a position, hit both buy levels, and be lucky enough to get out, with a 10% gain or so, then I will often do that and let the other ride. So you can see the R2 is up here at 29, 34. So that's another 80 cents. You can see everything on this rally is strong. The RS, shows a similar sort of flag formation. It's positive and making a new high. OBV, same thing. So, it's still good. So if instead it should pull back into where we got out, so now this 26.42 level becomes good support, that's where I'd be looking to get back in between 26.40 and 27.40 if the market, is that accommodating. Questions about this chart or about FTI? All right, well, let's look at a similar example in an ETF. And that's the XLC, which has most of the FANG stocks in there, saw this action, kind of had a spike down to 46.20, which the pivot was 44.37. We didn't really get down there, and I wasn't quite quick enough to jump on it. At that point, the RS, the weekly RS, was negative. It bottomed with prices and had turned up. Unbalanced volume was much stronger, okay? So, and I like these 3 weekly bars. This convinced me that I'd been too cautious on this market, and it was time to get in. So, how to craft a strategy where you can not have too big a risk and participate, from the upside, obviously 51.22, that was the previous high before the market in late April. So that was the first target. 57, much higher target on the upside. Let's look at the daily chart, see what it was looking like at that point. Okay, so this is what the daily chart looked as of the close on the 21st of June. So you can see this had this nice reversal to the upside in early June, and that was a pretty good entry there. Didn't get that one. We got up to the pivot here, ran up to the R1, and since then it had not had much of a pullback. These dotted green lines are kind of where my buy levels were. So I was looking for a first buy level, not too much under the close. We closed at 49.40, so I was looking for 48.87 or 80 something in here where this first one is. And then if we got a further pullback, I was looking at this, more just below 48.50. Because the 20-day EMA was at 48.19. Pull back to there was possible, but I didn't think it was too likely. And for a stop, I think I was using a stop under this bar right here, 46.88. So the risk was pretty well controlled. Volume had really spiked with that close. You can see on that the 21st of June, it was up 0.42%, and volume, at 10 million shares was the highest we'd seen, pretty much all year. So that's one thing I look at as I try to, correlate that the volume with previous patterns during the day. And so the daily indicators, of course, were quite strong. So that favored, buying the pullback. You can see we had a nice little setup in the RS above its moving average. Moving average is flattening and then starting to flatten out, and we flipped back above it on that Friday. OBV was just a rocket ship. You can draw a downtrend here, connecting these two peaks, and you got a move above those in early June, not too far off the lows. So this red line is pretty much where the stop was recommended. And then let's see, so we got up to this high. This is the next week's action. So Monday, Tuesday, Wednesday, Thursday, got a pretty sharp downdraft right back down to that the 20-day EMA, which had risen to around 48.32. Hope you can see that number down there, and turned higher from there. So gave a really good setback, a little sharper than I was thinking, but we held above that. Once again, the monthly pivot support 48.05. Didn't get quite down to that. The RS I'd mentioned it just turned positive. So this was the Friday close. Went higher Monday to 49.62. Tuesday down. Tuesday down big. Wednesday down. Thursday stabilized. Friday closed higher. Now this is 1 week older than the chart I just showed you, and the volume, it peaked, the prior week. So on Monday's new high, less volume, low volume on the pullback. That's a good sign. The RS dropped back below its moving average, but then by Friday, had flipped back above its moving average. On balance volume, not a waiver there. Since it's, remember, an on balance volume, it subtracts the volume out, if the prices close lower, and it adds it in if it closes higher. So even though we close lower here, it doesn't tell you the magnitude of the decline. It just subtracts out the volume, and the volume those days was pretty low. Remember, this was like 10 million, so right in here was probably 3 or 4 million shares. So pretty pretty normal sort of pullback there, and did fortunate enough to create a good entry point here. And then if we look at the current chart, it had another setback this week. So we got up to 51.35 and got hit pretty good again, going into, this week's action, a low of 49.46, and then we moved higher on Tuesday, good up day on Wednesday, not too bad Thursday, gapped higher on Friday and closed strong, up 2.85% for the day. And you can see that there's monthly pivot resistance now at 52.43. So long positions, probably we don't quite have, a 10% gain on this position yet. I'll be watching this rally. I think it's still got, further to go. There's some other, measuring techniques you can measure. So, this 46.20, up to 49.60. So that's a move of 340. So if you tack 340 onto this, then you can get a target of 52.80 or so. So that's a possibility. You can see as of last week's action, RS is back to positive. Volume again was pretty much low most of last week, but strong again on Friday. OBV is strong and pointing higher. And of course, the weekly studies, which is how I start my weekend analysis off, convert this to a weekly chart. You can see the weekly chart's looking pretty good. The Keltner channel Stark band 53.59. Remember, I don't know, I don't keep track of who all attends, but you can look at all the numbers that are important for the next week. The pivots, these are yearly pivots. Keltner in purple, so you can see it's at, the midpoint is at 50.27, 53.59 for that upper channel for next week. And if you look back at, at these twin peaks, 51.59, so that, we already overcame that. So we've sort of broken out above these twin peaks. So that's a pretty good sign technically. How about the technical indicators? RS is positive weekly. On balance volume looks strong. This just came into, real existence about a year ago, so that's why we don't have any volume data going back. But I like the composition of this a little bit better than FDN, but though it looks pretty great technically too. It's one I've traded in the past, and if you we can, if we look at FDN, it's the Dow or First Trust Bank Dow Jones Internet or something. It also looks pretty strong. I haven't been in that. Right in here makes it a little tough entry, but you can see it's got some pretty good upside. We were in it earlier in the year and got out, and but it too has broken out to a new high above that April high. So that's a very positive sign, and something that can't be quite ignored. So pay attention to that. Sounds good. So let's see. Oh, I don't have too much more left, so we can. I might have time for some questions. Silver's got a lot of interest. It had a great setup, so I wanted to talk about that, and the pivot points were pretty useful. So this little blue box shows where we recommended it. I've been watching the volume. It had a really nice move up. You can see we got up near those bands. You gotta, if you haven't started using these, or use Yahoo as free real Stark bands, the numbers are a little different, but it's the 1454. You can see, if you, I've always written these bands are a great tool to tell you when not to buy or when not to sell. So if you were long and you rode out this entire decline, you got down here, we're down to 1395, and you're thinking, I can't stand this anymore. You should have looked at the pivot support here. This S1, was holding 1385, so it held above that, and we were very close to the lower daily Stark band, also a positive sign. And so create a good entry between about 1423 or something and 1415 here, and it's been pretty much off to the races since then. Good volume. Once again, the volume on the decline, was fairly low. Last week, we'd gotten up towards that upper band, high of 1559. I advised traders to take profits on half the position on Thursday's open. Not that I'm bearish. I don't see anything, really, the on-balance volume has been declining, but no real signs of a top. If SLV were to make a new high, above 1559, and then I'd be watching the OBV to see if there's any divergence. I don't really see that at this point, but it had a great run in a very short period of time, so I try not to be greedy. My view is that a setback will be a buying opportunity in this market. So let's look at what we're looking for there. And oops. Okay, so here's the hourly chart. So the high at 1559, got gapped lower a little bit on Thursday, kind of drifting lower right in here. So we're so let's look at what you might look for. If you were looking for a setback, we can use our Fibonacci tool. Hit Fibonacci retracement. Let's change the color here. Yeah. Okay, that sounds good to me. And pick this low at 1395. You go up to this high, and you get 1497 is a 38% retracement, and 50%, and then 61.8%. So really, I'm keeping a pretty wide stop on the rest of the position. You really went 1454 would suggest my weekly and daily analysis is dead wrong if we drop below that in any time. So, don't think that's going to happen. Let's save those changes. And of course, if you want another way of looking at the support and the resistance level, let's add to the pivots to this. Once again, these are weekly pivots for SLV. And you can see the pivot level is at, at 15 even. And then the S1 is down to 1445. So you can see 1503 is the low down here. So that's that's a level I'd be looking at. But if I think we got out at let's see, what did we get out at? So wherever this opening price was. So for 15.46. So if I can save 40 cents, on a $15 stock, that'd be enough for me to get back in. The hourly indicators here, they do work pretty well in the liquid market. You can see the on-balance volume actually turned negative before the high, before we peaked out, and it's still negative. RS is really irrelevant for this market because you don't really care whether it's performing better or worse than the S&P 500, so take that out. So it gives you a little different picture. So that and of course if you want to look at this on a weekly basis, you can see we're up near the the weekly Stark bands here too. So for this week they were at 15.57. So we know the high was 15.59. So we're bumping up next to this. And you also look in this chart, you can see, well, okay, that's where a lot of people bought silver at the start of 2018 and may have been holding it for a while. So they're back to break even, maybe an incentive. The weekly analysis does suggest that it has made a low, but longer term positive, short term could see a pullback. So that's kind of how I'm handling it. GLD we're also in. It's lacking pretty good. Lots in the news about getting a weaker dollar. That hasn't happened yet. If we were to get a weaker dollar, that typically will give the metals a boost. They've been doing a great job, with the dollar strong. So, and we have the spread here of GLD versus the S&P, which we don't need. Let's take that out. And we have the on-balance volume, still in a clear uptrend, higher highs, higher lows. So we're still holding on multiple long positions here. So you can kind of see, if I look, signs that we had this high at 136.60 and the band is currently 137.68. So I'd be watching for any signs of that it's run out of momentum up there. Still think it get up to this R2 level, close to 140. But we've been trying to scale in and scale out of this position since it formed a doji buy signal in October. So it's been a pretty good run for us. Pretty much. One other chart I got prepared, and then I'll take a look. We looked at last time we did a video lesson. We looked at the signals in TransUnion. It was bottoming out. It had a doji here, and then a doji buy signal where this blue line is. The weekly studies, turned very strong. It's had a stellar move. Looks like we got out of our last position a little early on earnings. Just below 79, and it closed at 84. So it's been a gangbuster here. I took profits at what was the weekly pivot level and the Stark band, but it blasted right through it. So really strong move. It's my philosophy is you can't let that bother you too much. Probably will see a setback. You can see it's very overextended. Look what happened back here. Strong move. We had 2 weeks of consolidation that took us back to about third of this range. So, right now the range for the week has been about $10. So that means you could potentially get a pullback into the low 80s in this stock, which would be another buying opportunity. Somebody asked me, do I like TradeStation for swing trades? Yeah, I like TradeStation. It's fine. It's a great platform. I like its radar feature. I like Navigator. I use stock charts a fair amount. I mean, as I think I mentioned before on this, I really like the hourly charts best on stock charts and then on TradeStation. Stock charts, I like them because it labels the peaks. People are always interested in what I see for Apple. Of course, it reports, I believe, after the close on Tuesday. So You know, it's had kind of a grind higher. Pretty much, you know, the daily studies did turn positive. You know, about the only really good entry, you know, based on the RS was this pullback to 190.30 about, looks like in the second week of June. Unbalanced volume, you can see, has not been impressive. And that's one of the things that kept me out of. You know, if we annotate this chart, which I always find is helpful, yeah, that, you know, there's the major downtrend. And right now, it's just never, you know, the volume has not been very interesting as we've moved higher. And the RS is positive, but not the unbalanced volume. It closed above its moving average. We're bumping right into this 209.57. That's the R1 resistance. So when I look at a market like this, I go, like, where's your stop? You know, well, the first stopping place in a market, let's save this so we can look at some price levels. So that low, 202.36, you know, but this is much better support, 198.41. So, you know, you're risking about $10, $9, you know, which is a little less than 5%. And I guess if you're really bullish, you could say, well, okay, 221 is monthly pivot support. I'd rather see it stabilize and pull back into the 20-day EMA. That might create a better opportunity on the long side, and hopefully the volume will get better. You can see the volume did pick up a bit on Friday, better than it was on Wednesday and Thursday, so that's a good sign. You know, that's so that's something to watch. Pretty much, it was a good week for tech, and you know, and Amazon is another one that's popular. Yeah, it depending on who, as all of you know, I don't pay a lot of attention to the fundamentals. So depending on who you listen to, the earnings really weren't that bad, or they were, you know, or were bad. So we got right back into the June high, pretty much a little below it. So, you know, and then we got the more important support down here at 1872, and you know, we're down, got near the lower band on Friday's action. So kind of see what we're going to do down around here. Yeah, I teach extensively about using, you know, hourly analysis to enter. Oh, well, let's go back for a second. You can see that the one concerning part is the RS scores dropped sharply. On balance volume, I'd like to see that flip back to positive early this week. See, volume did pick up a little bit on this decline. So, you know, that's a little bit of a negative. Let's look at the hourly chart here, and one more try on this. We'll see if we can get an hourly chart here before we wind up. You know, you know, it gave some short-term positive signals early in the week. We got up to that, you know, look at this low, 201.55, high 201.30. So the rally kind of stalled where, you know, you would think it was in the chart. And so now we're trying to see what's going to do down in here. So, you know, you could get another pullback down into this lower band. If you can hold then and turn higher, you can see on the hourly chart back in here, you have pretty good support back in this 24 down to 1906. So that's kind of how I see it for here. Somebody asked a question about symbols and TradeStation. You know, my Tom at Viper Report is my email. But if you just drop that into Google, you know, TradeStation symbols, Dow, S&P 500, Nasdaq, and Russell, it'll come up with those symbols for you. And that's what I do if I don't know the symbol. What do you think of Tasty Trade for a platform? Never used it. I know the Tasty Trade folks pretty well. So I know Tom Sosnoff fairly well. So, and you know, it does really nice work in options. And I really like the Thinkorswim platform. I think is quite good too. It has some really nice pricing and charts of option data. I think they're the best I've seen anyway. So, you know, if you're an option trader, it's a couple of my students use it, and it's really helped them in their performance. I will be including a survey, so please take the time to fill that out. I'm thinking next to be looking at combining entry Stark bands and the 20-period EMA for entry points. So like even if you look at this chart here, and we can kind of add in the the Keltner channels and modify them to approximate Stark bands. You can see how that looks. So you can see, we get back up here, nice little pullback. Here we pull back, we held that. So they give you a good idea. They also did in March. That March set pullback we looked at came, pretty close to some good support, and we had another push to the upside. So thank you all for tuning in. And one last question: do you like Interactive Brokers? Never worked with them. I've heard good things about them. Yes, of course, in my stock service, I mean, one of those charts were sort of similar to what I feature in terms of recommending the stocks in the Viper Hot Stock service. For those of you who are interested in subscribing, that's exactly what we do. We follow up. So each issue has probably 4 or 5 stock charts. Great. Well, I hope you have a good weekend, and I hope you enjoyed it. Thank you very much. If you're interested in specific investing and trading recommendations in ETFs, you can go to viperreport.com, and at the top of the page you'll see the link for the Viper ETF report. If you click on that, it'll tell you about the service and what it includes. Reports are sent out twice a week, and billing is through PayPal. It's just $34.95 per month. If you trade stocks, you might consider the Viper Hot Stocks report. It also comes out twice a week, and it's just $34.95 per month through PayPal. I also provide individualized mentoring or tutoring. Click on the mentoring link. It'll tell you a little bit about it and some of the feedback I've gotten from professionals in the field as well as clients. I also have an individualized intensive advanced decline line course that includes one-on-one training with me for over 6 hours so that you can determine the major, intermediate, and short-term market trend and become your own investing professional. Hope you'll take a look. Thank you.